Doc, Sean Duncan with SMD Consulting and Accounting, here to give you some more information about business and tax and all that kind of good stuff. First, though, let's knock out this disclaimer. Okay, thank you for putting up with the disclaimer stuff. I want to talk a little bit today about partnerships. Now, partnerships are exceedingly complex. There are so many rabbit holes we can go down. I'm going to keep it high level. In your comments, or you want to send us individual message if you want more details on things, please send us that. We want to do more videos that give you useful information. So at a high level, similar to when we talked about sole proprietorships, I want to talk a little bit about liability and I want to talk a little bit about taxes. Now, again, not a lawyer, so it's not technically legal advice. I'm giving you perspective. When you are in a partnership, and a lot of you guys are, if your other partners are general partners or limited partners, that stuff starts to matter. Now, most of the time when I'm talking to our physician clients, all they care about is decisions and compensation. Makes perfect sense. You want to know if you have the authority to make a decision, and you want to know what does that mean for your pay and how much you can take home. What I want to talk to you a little bit about is the accounting world and the law world of this thing. First and foremost, liability. You need to be very, very clear. Are you a general partner or a limited partner? Now, the tax laws and rulings are starting to change a little bit about this, so just understand that this is a dynamic section of the tax code. But at its core, the general partner is a partner that has management authority, makes decisions, and steers the direction of the company in some way. Now, if it's just you and one other individual, cool. You probably are both general partners. But larger organizations have general partners and then other individuals are added as limited partners. Why is that relevant? When you are a general partner, you are personally and fully liable for all of the activities of that practice. Let's just think about that for a second. There's 10, 15, 30 practitioners, not even counting MAs and PAs and nurses. If something goes wrong in that practice, if you've raised your hand to say you're a general partner, you might actually have personal liability that ignores the entity type. And this isn't even just malpractice. You guys are used to what malpractice means in surgery or such. This is business risk. Fail to have a contract fulfilled, don't pay a vendor and they get grumpy. Yeah, it can actually punch through. Again, consult the attorney on the specifics of this, but this is what I need you to understand is that checkbox, which a lot of people just say, yeah, just checkbox, it's just some tax form thing, I don't care. It matters, and it matters dramatically. Just like we talked about with sole proprietorships, I don't want you personally on the hook for activities that you can't even control or manage. Now, there are solutions. Don't get me wrong. There's ways to work our way around this. This is why the proactive strategy really, really matters, and you want your lawyer and accountant working together to understand the best way to structure this partnership. Now, many of you are limited partners. You don't get a say in any of this darn stuff. You're just join the organization. There's 600 physicians across the US. You are now a partner and you get your K1, but man, some other management team handles that stuff. Understanding your role does matter. Now, the good news is, we're going to still stay on the liability part, limited partners, barring some exceptions, your liability is limited to the extent of your investment in the practice. So you've got $100,000 of equity in the practice and the whole thing goes belly up, yeah, you could lose that. But there's not the punch through. See, the general partner might even face a punch through, and that's what's so terrifying. But as a limited partner, nobody wants to lose money. I don't want you to lose your interest at all, but it's limited and has sort of a ceiling or cap. Again, there's exceptions on that. Now let's flip that around. We just talked a little bit at high level on the liability portion. General partners personally liable, limited partners liability limited to the extent of the investment. But what about taxes? Here's what's really, really interesting. When you are a general partner, you are subject to the full self-employment tax. If you watch the other thing when I talked about sole proprietorships, you're going to pay income tax. And we know there's state taxes, and we're not talking about that. That's for a later series. We're just talking federal. But you also pay the employment tax, which is Social Security and Medicare. That could be as high as 15.3% on top of your income bracket. I don't know about you. I don't like paying a whole bunch of taxes. There are ways to manage that, but the general partner by default is subject to that full self-employment tax. There are phase outs that it doesn't stay at 15%, but man, I don't want you paying that either if we can help it in the properly structured organization. So general partner, full personal liability, and a higher tax? Does anybody want to sign up? Yeah, I know, that's the problem. But the limited partner, let's talk about the limited partner's taxes. The limited partner at its core does not pay the self-employment tax because they're not in a management or general partner role. So you pay income tax that flows through. There are exceptions with guaranteed payments and the like, and we can cover that stuff later if you're interested. But in a general rule, the limited partner is not subject to that employment tax. So now when everybody's trying to line up and deciding who they're going to be, do you want to be the general partner with full liability, personal liability, and a higher tax, or a limited partner with limited risk and lesser tax? Seems kind of obvious, but remember, decisions in guiding the practice still matter too. So you've really got to collaborate with your lawyer and your accountant to understand what are these implications, both from a legal and tax implications, to decide what role best suits you in that particular organization. And if you're on your own or you have a partner and she is the general partner and you're the limited partner, the rules don't change. It's just the quantity of people. Please, guys, consult your attorney and your CPA before joining an organization. This is big stuff. And the more successful you get, the more risk there is, both from a liability standpoint and a tax standpoint. I'd love for you to not have any problems and have it set up from the get-go and not discover 15 years later that you had an oops. Hey, Doc, I'm here to help. Thanks.